Hi tax peeps, I am Elena. In this video, we are going to discuss the tax implication on the sale of real properties classified as capital assets applied to individual taxpayers. So first, who is an individual taxpayer? Individual taxpayers include Filipino citizens who are residents and non-residents of the Philippines, resident aliens and non-resident aliens not engaged in business or trade, resident aliens and non-resident aliens engaged in business or trade. We also have to define what real properties are, and these are defined under Article 415 of the new Civil Code. Real properties may include land and buildings, trees and plants, everything attached to an immovable, statues, machineries, animal houses, fertilizer, mines, docks, and contracts for public works. We also have to know what real properties are. For purposes of gains derived from dealings in property, real properties are classified as follows. Individual taxpayer, real properties includes lands, buildings, and machinery. And for corporate taxpayer, real properties includes lands and buildings. We now proceed to capital assets. Capital assets refer to all properties held by a taxpayer, whether or not connected within his trade or business, and which are not included among the properties considered as ordinary assets under Section 39, Paragraph A, Sub 1. Examples of capital assets are account receivable, securities held in investments and goodwill, sale of a partner's interest in a partnership, and a car used in trade or business and personal use, wherein one half of the value is ordinary asset since used in business, and the other half of the value is a capital asset since it is not used in trade or business. And those were just the basics. To discuss the tax implication of capital assets, Florence is here to help us. Florence?
Hi there, it's Florence. Let me ask you a question. When you sell your real property, do you need to pay tax for it? Well, of course, yes. The sale of real property classified as capital assets is subject to a capital gains tax of 6%. As to its tax implication, if the capital asset is a real property, then so remember, if the real property is a capital asset, then now, let us define what is fair market value. Since the tax implication will not always be capital gains tax, hence, an alternative taxation in expropriation sale applies. At this point, here are the requisites for the sale of a principal residence to be exempted from capital gains tax. Note the following reminders regarding such sale. Now that we have learned its tax imposition, here's Cedric to explain to you what's next.
Hi, Cedric here. It's time to pay our taxes. Approval and payment of capital gains tax. Who will file? When to file? Where to file? what to file. So, the following are the mandatory requirements in filing the capital gains tax returns. The following are other additional requirements, if applicable.
Does a taxpayer always have to pay tax?
Well, not always, Elena. Let me explain. The following are the legally sanctioned ways of avoiding payment of capital gains tax. The following are the valid reasons that allow resellers to exempt themselves from capital gains tax. Under Revenue Regulations Number 7-20034, Paragraph A, Subparagraph I, lastly, Section 49, Paragraph C of the National Internal Revenue Code, or the NIRC, provides that
Thanks for the info!